Hi everyone, and thanks for being there again. Quick story. I spoke with a prospective client last week who had no idea how much she could receive from government benefits. If that's you too, no worries. By the end of this video, you'll understand the three big ones in Canada: CPP, OAS, and GIS, how they fit together, when to start, and a few planning moves that can save you stress and tax. So let's jump right into it. CPP, Canada Pension Plan. What is it and how is it calculated? Let me begin. CPP is the pension you earn through your working years. If you're an employee, it is deducted from your paycheck. If you're a self-employed, you pay both the employee and the employer portions when you file, just like I do. Yes, it stinks, but if you don't contribute, you won't build CPP credits. Now the question comes, how much you will get? And that depends on three things: how much you have contributed, for how many years, and which years the government drops from your record. There are dropout provisions for low earnings years, child rearing and disability. So it definitely depends the years government drops from your record. Action step. How do you know? Log into your My Service Canada and download your CPP statement. That's your personal starting point. When to start CPP? 60 or 70. You can start anytime between 60, 70. It's up to you. You can start as early as 60 or delay it as late as 70. Starting before 65 reduces your payment. It's reduced monthly. Starting after 65 increases it. Also increased monthly benefit. So two quick realities. If you stop working, say at age 55, you wait until 65, your statement might still be assuming you're contributing right up to age 65. If you're not, your final number could be lower. So run a no more contributions estimate before you decide. CPP is a taxable income. You can ask CRA to withhold tax at source so you're not hit with a surprise at tax time. So the rule of thumb on timing is, if you need the income or expect a shorter lifespan, earlier can make sense. If you have other income to bridge your 60s and want a bigger inflation index lifetime payment, delaying towards 70 often pays off. If you've been on CPP disability, note this: at 65, your disability benefit ends, but you can still choose to delay your regular CPP up to age 70. It does not have to start automatically at age 65. Survivor and other CPP pieces, just the essentials. There are extra CPP benefits, just like survivor pensions, disability, post-retirement benefits, and if you work after 65, and there's a small death benefit as well. If any of those apply to you, especially if you're combining survivor plus your own CPP, get a personalized calculation done. The rules cap combined amounts and timings can change the outcomes. So that is about CPP. Now let's come to OAS, which is Old Age Security, which is different from CPP. OAS is separate from CPP and does not depend on what you paid in. It's based on your residency in Canada between the ages of 18 and 65. Roughly 40 years of residency is equal to full OAS. Fewer years, proportionate amount. Two timing notes: you can defer OAS up to 70 for a higher monthly payment. OAS is subject to a clawback if your individual income is above a set threshold. If you're retiring this year, but last year's income was high, you might be clawed back at first. In that case, consider delaying OAS until your income actually drops. Then start at the higher deferred amount. Now that takes me to the number 3, which is GIS, Guaranteed Income Supplement, and which is basically for lower incomes. GIS is an income-based top-up paid with OAS. It's designed for Canadians with low retirement income, and the amount depends on your current income. For couples, it's based on combined income. If you're applying for OAS and your income is modest, you'll be assessed automatically. Otherwise, ask about it. Some people qualify for a small top-up and they don't even realize it. Inflation indexing. Why delaying can be powerful? CPP, OAS, and GIS are indexed to inflation. That means your payments adjust over time. If you've delayed CPP or OAS and logged in a large base payment, future inflation increases happen on that larger amount. That's one reason many Canadians choose to delay at least one of these benefits if they can bridge the gap from other sources. Practical planning moves. Download your data. Grab your CPP statement from My Service Canada and note your OAS eligibility date. Map your income by year. List your expected income from 60 to 72. Watch for OAS clawback years and decide whether to delay to avoid the clawback. Now, let me talk about bridge strategy. If you're leaning towards delaying CPP, plan where your income will come from in the meantime. Is it coming from RRSP, from RIF withdrawals, from TFSA, or non-registered? Sometimes drawing on RRSPs earlier reduces your lifetime tax and future OAS clawback. So now let's talk about tax withholding. Set withholding on CPP and OAS so you don't owe a big balance to CRA. All of those change the calculus. Get a personalized projection before you lock in your start date. Common timing traps so you don't step in them. Let me give you those. Assuming OAS at 65 is automatic and optimal. If last year's income was high, you could be fully clawed back. Delaying a year can mean a higher lifelong payments and less clawback. Basing decisions on the default CPP number. If you've already stopped contributing, that default may be too optimistic. Recalculate with no further contributions. Now, let's talk about ignoring taxes. CPP and OAS are taxable. GIS is not. But earning extra income can reduce it. Coordinate withdrawals accordingly. Quick example, super simple flow. Picture someone who stops working at age 63. They delay CPP to 70 for the higher index lifetime amount. They delay OAS 1 year because last year's income would have cost a full clawback. They start at 65 at a higher rate with little or no clawback. They fund ages 63 to 69 with a mix of RRSPs, RIF withdrawals, and TFSA. Net result, lower lifetime tax, bigger inflation index-based benefits later, and fewer clawback headaches. Let's do a wrap up here. Government benefits are not set it and forget it. A few smart decisions on when to start CPP and OAS and how you structure your other income can add real dollars to your pocket over a lifetime. If this raised questions about your situations, your survivor benefits, disability history, clawback worries, or whether to delay, drop them in the comments below. I'm happy to help you think it through in plain, simple language. Thanks for watching it till the end, and I'll see you in the next one with a new video on a new subject. Thank you so much for watching it.